7/9/2013. We have the NASDAQ Composite Daily Chart. One of the things about the NASDAQ Composite has a lot of big high beta stocks in it, like Google, and Apple and Amazon. But listen, this index runs differently than the Dow and the S&P, and we're right back up here at the all-time tops. We're going into a calendar earnings season. The volatility has happened. The reversal volatility right down here to the 100-day simple moving average was 33.01. We've had 1, 2, 3, 4, 5 up days right here, and then we continue to have a 3-day consolidation, but these last days here have been very bull strong movements up here. One of the things that we're going to caution everyone around the world, hedge fund managers, I don't care, lower end traders, institutional ones, is you're going to have to be careful because those earnings season is coming into play. And one thing about it is that when stocks and indexes are up toward their all-time 52-week highs and you're going into an anemic growth environment, is a lot of the move that can happen in a good earnings season in this particular quarter in the summer period. The summer rally is right here. This is your summer rally. When we pull back on the NASDAQ Composite, the highs up here were on 5/22 when we called the reversal. The high was 35.32. We corrected to the lows, everyone, on 6/24 where the summer rally started, and the low was 32.94. That was a big correction. It was over 200 points. On the flip side, we're back up here with the high of 35.08 on the NASDAQ Composite on today's date. What I will like to show on the weekly level on the NASDAQ Composite is that you can see where these high reversals were. Going into earnings season, and you've been into stocks, and you're up at a major calendar 52-week high with a big bull run in the summer period of 2013. In fact, this particular seasonality was stronger this last week than any other prior weeks or the beginning of the week of 2013. That was back in January. So here was a correction. We're above the 10-week. That's bullish. 34.50 is a 10-week right about here. 34.48.75. In the short term, on the weekly level, we're reaching overbought levels where markets have to have pullbacks. On the daily level, we're up here at about 97.49% at the resistances. I will tell people to be very cautionary with big beta stocks. They've all made their move. All of them. And it was a great rally up here. But there's going to be a lot of answers, and the market's already anticipating a weak earnings season. Let's get that straight. And the thing about it is that I will give you an example of what happened to a company that already gave an earnings warning yesterday, ISRG. They ran this stock as high as they could. It had closed at $500 last night. And then it hit a low today of $406. They came out and they gave a warning guidance. They pumped these stocks up to all-time highs. They come out, they give an earning warning. Earnings season is going to be loaded with a lot of these like that. So, once again, that's just an example of being fully invested up toward the highs here, where volatility works both ways. This was the bear side volatility. This is the bull side rally volatility. It's not going to stay a one-way market in the short term because we're overbought. There will be a pullback. Beware. We will be looking at the leadership stocks that have ran too far too fast that created the great bull run here in this NASDAQ Composite. One of the other things that I'm going to show outside of the NASDAQ Composite is I'm going to show this. This is a NASDAQ comp right here, but the composite itself, I just want to show this so that you can see it clearly. The relationship between the two is going to be that bull that I showed, but most importantly is the VIX. That's the S&P. This is the fear indicator. We're back below the 200-day moving average. When the market sold up, we said, everyone, when this puts a high in a reversal, then markets would put in lows. Here is the NASDAQ 100 one. Let me pull that one over and see if I can get it in the chart for you. Here is the actual NASDAQ 100 volatility index. When we were complacent down here at 13, we broke a big time high. When the bottom was put in the NASDAQ 100 and the NASDAQ composite, this started reverse. That's where your summer rally started from. So you definitely, we will tell people to be very aware that this is getting back to the historical lows, that the volatility that is ahead of everyone, if you take a look this on a 60-minute, we started a little uptick. So you can see from 1760 all the way down here that when this goes higher, then markets will pull back. When these go lower, markets rally up. So it's a good reference, once again, to understand the NASDAQ composite's up here, and so you can see where the complacency is, and you have a little bit of direction to know that if the VXN, the fear indicator, starts to rise, then we're going to have a pullback. It would be healthy for the market, and that the price volatility will increase, particularly through next calendar week, when we start getting in the high beta earnings names. And this quarter in July will be anemic growth.